What's going on, tribe? It's Mr. First and 15th back at you, giving you that superhuman advice. If you're not superhuman yet, just keep digesting the content. You'll get there. If you're looking to supercharge your growth, go to my website, adjacentprops.com/101 coaching. Sign up for one of the sessions. I'll put the link on the screen. Link is also in the description section below if you're watching on YouTube. Listen, this is for real estate professionals as well as business professionals and anyone seeking personal development. Prices are very friendly, ranging from $14.99 through $69.99. So forego that drink this weekend, that new outfit, invest in yourself. So now on to our topic of the day, second episode, why making a purchase, a property purchase with the credit card makes sense. And also, this can be transferable to, how to obtain the startup capital for your new business. Okay. First things first, you need to know how to read, and you need to take the time to read. Okay. Now, the first thing you're going to do is you're going to visit this site called nerdwallet.com. Okay. NerdWallet, they pretty much list all the credit cards, the offers, the promotional periods, yada yada. So you go to nerdwallet.com and you're going to see the list of credit cards. They have it categorized. You can click on balance transfer plus 0% APR, or you can Google credit cards with no balance transfer fees. Okay, so when you do that, you'll bring up a list of credit cards that have no balance transfer fees, and I'll put screenshots on this video so you can see the sections that I'm referring to. Okay, so now here's where the reading comes in. All right, you're looking for a credit card with a 0% balance transfer fee and a 0% APR. Okay, now these APRs at 0%, they don't last forever. It's an introductory promotional period. Okay, usually it ranges from 15 to 18 months. Before that, it was 12 months, but I think you can get 15, 18 months. I know Bank of America has it. Chase Slate, they also have it as well. Chase Slate, I believe they were the first credit card to actually have 0% balance transfer fee, and I think Bank of America started it on last year. I know these from personal usage. Okay, so what you're going to do is you're going to apply for the credit cards. Okay, and based on your salary and your prior credit history, they'll either award or deny you the card. Okay, now second case in point, you need legitimate credit. Okay, if you don't have legitimate credit, there are companies out there that can assist you in heightening your credit rating. Before, I've used 100% Finance to remove some credit inquiries, and they charge you based off of the amount of inquiries removed. So they're one, and then I'm sure there's others out there that you can research. Okay, now you apply for the credit card. Okay, now let's say you obtained the credit card. Okay, now you have a credit card with the credit limit. Okay, that's subject to 0% APR. Okay, meaning the purchases that you make on this credit card for this period, this window of time, which I said is typically 15, 18 months, is subject to no interest. Okay, for your balance transfers also is subject to 0% interest, but we'll get to that later. Okay, now in addition to that, what the credit card companies do now is they send you these checks. They're called access checks. Pretty much you're treated as a normal check. Okay, if someone were to write you a check, you would deposit it to your account. The funds would deposit into your account and be deducted from the payor's account. Okay, so if you have a business, what you would do is, and let's say you have the credit card in your business name, then you would write the check to yourself. Okay, and vice versa if you had the credit card in your personal name. okay? And thereafter, you would go to the bank, you would deposit the check into your account, whether it's your business or your personal account, depending on who you draw the check out to. Then you have the cash. Now, this concept is totally legitimate. I've been on the phone with banks on several occasions where they mentioned that many of their clients utilize this strategy to pursue cash. However, you should note that if you request these excess checks by the bank, then they'll treat them as a balance transfer or maybe even a cash advance. However, if you do not request these checks from the bank and they provide them unsolicited, then they typically treat them as a purchase. And the reason why this matters is if they provide them unsolicited and they treat it as a purchase, then the charges using the checks are subject to your promotional terms, which is the 0% APR. All right. If you do request these checks, and they treat them as a balance transfer, then it will be subject to the transaction charges will be subject to the balance transfer rate, which is typically 3 to 5%. All right. Now, the worst case scenario is they could treat the charges as a cash advance, which is far higher. You're looking at 20-25%. So again, very critical that you read your credit card agreement, the supporting documentation that's sent with the credit card, and even in doing so, I would still recommend that you contact the bank credit card company to determine what the details are of your credit card and usage of the excess checks. So you have this capital available. Now time to do your due diligence. All right, do your due diligence, market research, find a property, buy a property. Okay, so then after you do that, you know that this promotional period ends 15 to 18 months down the road from the opening date. Okay, so obviously you don't want to get to the expiration period without pursuing another financing route, because at the end of that expiration period is going to trigger your APR to be either a fixed rate or a variable rate. All right, and typically it's going to be between 15 to 20% for credit cards. If you have great ratings, a great credit card rating, or a great credit score, maybe you'll get 12%, but that's probably the best. All right, so pretty much now you obviously don't want to pay the 15 to 20% on this high dollar volume. So now you know, okay, I need to roll over these funds to another credit card or some other financing. It would make sense to start with a card that has a balance transfer fee. Typically, it'll range between 3 to 5%. And in conjunction with that, it would not have APR on the initial purchases, okay? Because obviously you're not transferring anything over. This is your initial capital. So you're actually drawing the check on this credit card. Use that card to start off, okay? Then once the promotional period is nearing expiration, then you would roll the existing credit card balance onto the new card, which I suggest it to be Bank of America or Chase, because they have a 0% balance transfer fee. Okay, you see why it makes sense? All right, you're going to roll over the existing capital to the Bank of America or Chase credit card, and it's not going to cost you anything. If you were to do this in the opposite direction and open up the Chase and Bank of America credit card, then rolling it over to another card would trigger the 3% or 5% balance transfer fee. All right, so at the end of the day, you want to pay as little money as possible, in fees and interest charges. Okay, now if you do that, Bank of America, Chase, they also have a new window period the promotional period, which is the 15 to 18 months. Okay, and so pretty much you will be doing this rinse and repeat, rinse and repeat. I mean, you could keep doing this as long as you pay off your credit card balance. And it seems like the trend is for more banks to issue credit cards that have a 0% balance transfer fee. I mean, Chase started it. Bank of America, I believe, rolled it onto its platform last year. So that's two right there, and I'm sure the trend will, follow. All right. So the reason why this is a better way to invest rather than traditional financing is because traditional financing you're paying, right now I would say 5.5%, 7.5%. If you do like any type of hard money, you're looking at 7.5 to 15%, right? So it doesn't take a genius to realize, zero is way less than 5.5 to 15, right? So this is the route you want to take, right? All right, now this is an add-on to that first component, okay, because that's the sauce, that's the method. Okay, now if you want to, let's say you want more capital at your disposal, so obviously you could open credit cards at different companies, but that just gets a little convoluted when you have all these credit cards open. So let's say you want to roll on credit cards, and let's say you have credit cards open at a bank, right? And you want to roll that credit onto your card with the promotional APR and balance transfer. I mean, it only makes sense, right? So what you'll do is, let's say you have two credit cards open, right? You have one for $10,000, one for $5,000. All right, that's $15,000 combined. And let's say all the credit is freely available. Okay. What you'll do, and you open up this new credit card, okay, that is subject to this promotional period, 15 to 18 months, like I've said before, and also 0% APR, no balance transfer. Okay, you open up this card for $25,000, right? So what the bank will allow you to do is they'll allow you to aggregate, to lump all the credit cards or credit limits into one. And it only makes sense for you to do it into the newest one open with the promotional period, right? So once you get your new credit card, with this promotional period, you will call your bank and you say, listen, I want to lump the other two credit card limits into the new card, and voila, you have $40,000 worth of credit at your disposal now. All right. And so then, you could purchase more properties with the higher amounts, or you can use that capital if you're the leveraging type. I have $40,000 at my disposal, so I can make a property purchase for $200,000. Okay, so there you have it. That's why making a property purchase with a credit card makes sense. It's cheaper in terms of the financing costs. You can continue to rinse and repeat. Now, obviously, you need to be financially responsible and pay down your credit card bill, and I'm not just talking the minimum payment. At least, the minimum payment, 1.5 times the minimum payment. I'm a 2.5 type of guy. I like to supercharge my debt reduction, right? So my credit card bill was $400. I would pay $1,000, right? Everybody's not like that, but I don't like having a lot of debt on my balance sheet. But everyone's different. All right, so that's your content for today. If you have any questions, feel free to drop me a comment. And if you don't have any questions, just tell me what you thought of the video. Your feedback is greatly appreciated. And like I said, looking to supercharge your growth, forego that drink, that new outfit, sign up to one of my classes, coaching sessions. Whether you want, short time, under 20 minutes, or you want something that's more substantial and valuable, that's an hour or 90 minutes. All right. So until next time, be superhuman.